Good evening and welcome back to the Rexfuels YouTube channel, where we discuss issues and trends in the oil and gas industry. If you are new to the channel, kindly like, subscribe, and share to stay updated on the current trends. Before we start, I would like to wish everyone a happy and prosperous Gudi Padwa. On this special day, we have with us once again Mr. Pranav Kanth, Director, Corporate Development and Strategy. He is a qualified expert in the oil and gas sector, owing largely to his experience with Total, BP, and Apar. Welcome, sir.
Thank you, Zina, and a very happy Gudi Padwa to you and to all of viewers.
Thank you so much, sir. My first question to you for today is the crude oil prices continue to decline. What is the story behind it, and where do you see the prices heading to?
Thanks, Zina, for the wonderful question. Because the story behind the oil prices is rather complex and interesting, with India being almost at the center of it, with all the global leaders and the economies trying to make a beeline to India and trying to convince India this way or the other way. This recent visit by high-profile leaders begun by China's foreign ministers visit to India, followed by Deputy NSA of USA to India, followed by the Nepalese Prime Minister, and in between the most important visit of Russian Foreign Minister Sergei Lavrov. So all this happening and with the sole objective of getting India to be on the right side of the visitors' narrative. And that what is most important and interesting as an Indian. So India is finally coming into its own. And the way India handled it, very independent, very focused on the larger interest of the country, which for some reason or another has not been very evident in the past situations. But this is new India, which is coming into its own. But more importantly here, the prices. The prices crashed the Brent prices crashed to about $104 per barrel, largely riding on the unprecedented release of crude oil from the SPR, the Strategic Petroleum Reserve by the USA. USA announced 1 million barrel per day of release for the next 6 months. Now, to put this in context, this is the highest ever release from the Strategic Reserve by the USA, ever. And when we say highest ever, it is 3.6 times more than the second highest release in the USA from the Strategic Petroleum Reserve. So this puts into context how important this is and why the markets and the prices have behaved in a manner it did. So for the next 6 months, yes, but what does it mean? Release from Strategic Petroleum Reserve essentially means drawing down on the inventories, which is good to manage the current prices or the volatility, but it is also indicative of the structural imbalance which exists and which cannot be handled by SPR release. So near term, yes, it will likely cool down things a bit, and it would be helped if the tensions across the Russia and the Ukraine onto the war front were to subside a bit. But that's the hope. Nobody can predict either way as to how the escalation or the lack of it is going to happen at the war scene. But what is more important, which is likely to be impacting the pricing in this week and the weeks ahead, is the new trade mechanism outside of the SWIFT and outside of the US dollar, which is being worked on. So India agreed to buy Russian crude in a rupee and ruble denominated trade, which is a watershed movement. There are so many details of this still needs to be worked out. It still needs to come to the public domain. So we'll need to wait and see. But the very fact this is happening, and as we had discussed about a couple of weeks back, that the discussion between Saudi Arabia and China on the yuan denominated oil trade, and China being the largest importer of Saudi oil, and similar such moves across. And we should not forget that the Europe still continues to buy Russian oil and gas and will continue to buy Russian oil and gas at least till the end of third quarter. So we are in interesting times. But coming back to the topic of how do we see the prices in this week, our prices currently at 104. And with all these things which seem to be rather bearish for the oil market, so our assessment is it would hold within a range of about 95 to 110, barring some unprecedented headline coming up from the war front, which could be bullish for the oil. But we are hopeful of it remaining in a narrow band of around $100 plus or minus 5.
That sounds like it sounds like a game of chess, basically, that we are playing at the moment.
It is in some aspects, yeah.
Well, I'm glad I could get your insight on this, and I'm thankful that you joined us.
Pleasure.
Thank you for your time.
Once again, wishing all of all of viewers a very happy Gudi Padwa.
Yes. Thank you so much for your time.
Thank you.